Thank you for joining us for another edition of the Optimize Weekly Market Recap. I'm Matthew McGraw, and today we'll be reviewing the key highlights from last week and what we're focusing on moving forward. Markets saw a mixed performance last week, with the Nasdaq edging higher, gaining nearly 0.5%. The S&P 500 posted a modest decline of less than 1%, while the TSX and Dow both pulled back close to 2%. Despite these fluctuations, the resilience of key sectors and opportunities in leading equities continue to drive our outlook. Let's dive into our top company, our top sector, and our top asset class for the week. We'll start off with Broadcom, which posted revenue growth of 50% in the last quarter, driven by strong AI networking demand and successful integration of key cloud software. Broadcom is poised to capitalize on growing investments, setting the stage for a record-breaking 2025. The IT sector leads with a 40% year-to-date gain and is projected to deliver 22% earnings per share growth over the next year. Fueled by AI advancements and strong fund inflows, the sector is on track for its best performance in well over a decade. U.S. equities remain our top asset class, driven by consistent earnings growth and market depth. Key sectors like technology and financials lead the way, supported by resilient consumer spending, reinforcing confidence in their long-term growth potential. Last week, growth outperformed value, rising to end up nearly 40% year-to-date, having gained 8% since the U.S. election. With pro-growth policies and a potential Fed rate cut on the horizon, this momentum underscores key opportunities for growth-focused investments. Investor confidence in the technology sector remained strong last week, leading to robust fund inflows. Consistent investment highlights optimism in the sector's growth potential and its continued strength in driving market momentum. Lastly, this past Friday saw equity volatility hit one of its lowest levels this year, with the VIX closing at only 14. This reflects growing investor confidence as the S&P 500 nears record highs yet again. Low volatility supports market stability, presenting strong investment opportunities ahead. For certain, we'll be watching Wednesday's Federal Reserve interest rate decision for signals on the pace of monetary easing as policymakers assess inflation trends and labor market strength. And on Tuesday, Canada's inflation rate report will provide key insights into price stability, with November data expected to confirm continued alignment with the Bank of Canada's target range. Notable earnings this week include Nike, FedEx, and General Mills offering updates on corporate performance and sector dynamics. Overall, it continued to be an exciting week in the markets, with technology leading year-to-date inflows and equity volatility hitting its lowest levels this year as the S&P 500 approached record highs. Growth stocks continued their strong performance, fueled by optimism around pro-growth policies and potential Fed rate cuts. As always, thanks for watching, and be sure to tune in next week when we look at all of the events that occurred and the ones we are watching going forward.